All right, well, here in Riyadh, I've got another guest with me right now. It's Antoine Flamarion, the Tikao Capital co-founder. Great to have you with us.
Thank you for having me.
Yeah, as I understand it, you and I were just speaking a little bit off record, not off record, I'd say, not live, but you were telling me about the substantial presence that Tikao has over here in the region, specifically in Saudi Arabia. So tell us more about that.
Yes, correct. Thank you. And I think, for us, we embraced the Kingdom vision and the Vision 2030, and we decided to have our portfolio company be present in Riyadh. So we have various projects in Riyadh. For instance, we are very involved in the Green Riyadh, planting over 10 million trees through our portfolio company. We have a manufacturing company producing aerospace piece in Jeddah. So for us, and especially for everybody in private market, you need to be local. You need to be global, but when it comes to private market, manufacturing, production, servicing, it's local. So we decided to be local.
You are seeing that opportunity right now in the kingdom.
Yeah, because there is a strong growth in the region. There is no doubt. The world is becoming more and more complex, bifurcated, and I think GCC and especially the kingdom will continue to grow.
Yeah. Your portfolio is, I think, 40% private credit. I was just speaking to Oak Hill, as CEO, earlier on in the show, also very positive about the outlook for private credit. Are you concerned at all that interest rates are starting to come lower, that there's a lot of competition in this space? It's going to take away at some of the opportunities there?
Three answers. First of all, the disintermediation will keep going. There is no doubt that. So that means we need more and more private credit firms to finance energy transition, cybersecurity, green agriculture. There is more and more projects that needs financing. So the future of private credit will continue to be, growing, and is super appealing. Banks have been retrenching, but they are still there. Standard Chartered published their result this morning. The Q3 is just amazing. Yeah. So that tells you that banks are still there, but there is still room for private credit. But you have to be cautious because, the more private credit is increasing, the more default you will get. Mm-hmm. And you mentioned interest rate. There is no doubt that short-term interest rate will decline because central banks are more and more active. But, 10 years US, 4.25 yesterday. So that tells you that long-term interest rate will remain high. And as a consequence, companies will suffer. So that means that you'll see default in the private credit, so you have to be cautious. And that's why we decided at Tikao to have our skin in the game. We are the largest investor in our fund. So we manage third-party money, but also our money. So private credit, no doubt, will continue to grow, but be cautious overall. And people have been overexcited and super excited with private credit.
Banks also are getting super excited and are leaning into fundraising for private credit as well. Do you see them as the disruptor or the disruptee in the private credit space?
I may say, from my point of view, and maybe it's I'm too young, but it's very surprising. What's the business of a bank? The bank is lending money, okay? And if you feed your competition, because you help them fundraising with your private bank and asset management, and or you create joint venture. We saw a lot of joint venture between, alternative private credit firm and banks. So I'm a little bit surprised, but the trend, keep going. Apollo just announced a big with Citibank joint venture, and it's probably good for them.
Yeah. Do you see the scope for further regulation hitting that space, though? Because it's still largely unregulated. Could that be one potential headwind?
So after 2008, regulator changed the rules mainly for banks, but we see more and more rules coming from asset management as a whole. So now in the US, you have a lot of discussion about asset manager owning bank share, and you see that coming as well for private credit. For instance, for CLOs, the regulation is different. You need to have, capital invested, your capital invested. So there is no doubt that there will be more regulation for alternative asset manager and private credits more specifically.
Well, talking specifically about Tikao, end of September, you reported that your AUM increased by 13%. I'm very curious to hear which area of the business, whether it's private debt, whether it's real assets or the private equity, which part of the business has been performing the best?
We keep raising money all around the globe. 15 billion, a third of our money is coming from private investor and wealthy investor. Mm-hmm. So that's a good trend and we'll keep going. And then when it comes to sector, we've been raising a lot of money for energy transition, private equity, direct lending, and cybersecurity as well. So we've got specific vertical like energy transition, but also private credit will continue to enjoy strong fundraising.
I'm going to ask you the same question I asked Oak Hill, which is just tying it back to the macro. I get a sense that people feel okay about the prospects for the U.S. economy, but there are some warning signs in Europe. I mean, you look at the likes of Germany, it's not really growing. The economy is growing at 0%. Real issues in the manufacturing sector, automakers coming in a lot of pressure. What do you think that bodes for the credit distress market?
It's fairly irrelevant. As I said, the world is becoming more and more complex, and Europe is going to be probably more bumpy because you mentioned Germany, but not only. We've got a lot of different situations. But at the end of the day, when you invest, you need to be a little bit contrarian. And when it's become a little bit bumpy, you've got tons of opportunities. And I think we build our firm like that. And if we decide that we've got offices all around Europe, if we decide that Europe is not good, we have offices in the US, we have 4 offices in Asia, we have offices here, so we can decide to shift, the place we invest. But I think it's going to be complex, it's going to be bumpy, but that leads to tons of opportunity. That's our view to approach things.
Yes, said like a true trader. Antoine Flamarion, thank you so much. That's the Tikao Capital co-founder.